Your Royal Highnesses, dear rectors, dear colleagues, dear students, ladies and gentlemen, I am extremely honored that Your Royal Highnesses have accepted our invitation. I would just like to briefly set the scene of this event within the share on stewardship of finance, which is an extraordinary example of excellent teamwork between the Vrije Universiteit Brussels and the Université Libre de Bruxelles, and has been made possible thanks to the constant commitment of our private sponsors. Chimamanda Adichie is an exceptional Nigerian author. In a speech at the TED conferences in 2009, she said, "Power is the ability not just to tell the story of another person, but to make it the definitive story of that person. The single story creates stereotypes, and the problem with stereotypes is not that they are untrue, but that they are incomplete. They make one story become the only story." Thus far, the quote of Chimamanda Adichie. The story of the financial and economic crisis of 2007 and 2008 still holds us in thrall. Economists, political scientists, sociologists, psychologists, philosophers, and anthropologists have studied the causes of the crisis. So do also lawyers, as myself. Hector Sands, CEO of the British Financial Services Authority, the Commission Bancaire of England, talking about the requirements that will have to be imposed on financial institutions, said, "There must be clear recognition of the need for institutions to contribute to the common good." But the question goes beyond that. The crisis started as an economic and technical problem caused by granting credit without adequate links to the real economy, and thus without security in the form of hard economic assets, but it then developed into a monetary crisis. The trigger was creditors' lack of confidence in the ability of sovereign states to fulfill the guarantees that they had offered concerning support for the financial sector. Politicians try to devise technical answers under the direction of the G20. However, the question is whether those answers are good enough to cope with the more fundamental problems that will increase the pressure on large parts of the financial system. The issues here are population aging and the cost associated with mounting environmental problems, not to mention the imbalances which ensue as emerging countries strive for the same comfortable lifestyle as the now stagnant developed economies. At the same time, it is noticeable that some are already reducing the pursuit of the common good to slightly modified continuation of the current system, without asking whether civil society will tolerate further hitches, some of which are already on the horizon. On the other hand, it is argued that the current crisis is far more significant than previous ones. Some observers think that the crisis represents a social revolution just as great as the change from an agricultural to an industrial society. The reason is the unprecedentedly marked global character of financial capitalism, or even financialism, which means that there is no single traditional nation, like Belgium, for instance, or even a regional authority like Europe, that can adequately counteract the effects of financialism. What then about the future? From my perspective as a lawyer, the globalization of the quest for short-term profits can be countered by global promotion of the fundamental rights to which everyone is entitled in the financial sphere. That means extending the range of human rights in addition to the existing socio-economic rights. We can be sure that the world will soon look very different from today's world. The established certainties about the framework of financial, monetary, and fiscal regulations and their interconnections no longer exists. Their story has to be rewritten in the light of the experiences of the past 5 years. The Stewardship of Finance share aims to make a contribution here. The younger generations are entitled to a future which they can view with confidence. That is the foundation that will enable them to contribute useful innovations to our society. To conclude with the words of Chimamanda Adichie, the contribution of this share, and you will hear a number of them, is only one storyline. Not the only one, not the definitive one, which is just as well. I now invite Rector Paul de Knop to welcome you in the name of both our universities.
Monseigneur, Madame, dear colleagues, dear students, ladies and gentlemen, I'm very pleased and very proud to welcome you today at the Vrije Universiteit Brussel. Particularly, I want to express my gratitude and the gratitude of my colleague and dear friend, Professor Didier Vivier, Rector of the ULB, to their Royal Highnesses, Prince Philip and Princess Mathilde of Belgium, for attending this session of the Chair Stewardship of Finance. A few months ago, I was already very proud to open the first session of this chair. The chair, the Stewardship of Finance, is founded on the belief that the current financial crisis has shown us the necessity of a moral reflection on the ethics of financial services. As a university, it is our social responsibility to contribute to such a reflection. Consequently, we have founded this chair on both research and education. From the research point of view, we hope to give rise to new insights about the ethics and the morals of financial activities, and more specifically of insurance and financial management. However, evolving to a more ethical and sustainable financial system will not be realized by research only. That is why we have chosen to dedicate a significant part of this chair to education. Students from various disciplines learn to think about the stewardship of finance during a series of lectures. Knowledge which they will be able to subsequently implement once they start working in the financial sector. All of the students who are here today will someday be our future managers, investors, CEOs, and bankers. To avoid history being repeated, it is of great importance that students get familiarized with the principles of ethical and sustainable finance. This is also our university's social responsibility towards society. In a few moments, some of these students will present us their projects. When I take a look at the titles of their presentations, I am expectantly and hopeful. First of all, because these presentations will give us an interesting view on the topic with probably enough material for a very enlightening discussion afterwards. And secondly, because I believe that in a few years, when all of these students start working in the financial sector, we will see the results of sessions such as today. I want to conclude this brief introduction by wishing you all a very interesting afternoon, and I invite now Professor Paul Jorion for a short introduction on today's session.
Your Royal Highnesses, Mr. Rectors, audience, students, in particular, because this is your day. This is your day to show what you're up to, and Rector de Knop has already shown the path, but it is for you to move forward and go through it. This idea of having a chair called Stewardship of Finance, I think, was really a great idea, in particular in the world we're living now. There is a slight difference between the notion of ethical finance, which suggests that maybe ethics can come as something which is external to finance and throw some light on it, and the notion that finance, like any of our institutions, has a particular task to operate, which is stewardship, to being at the service of the community as a whole. We have a long way to go. Yesterday I gave my last lecture, and I mentioned some figures, in particular from a poll which had used a sample of 387 leaders of the most important financial institutions. And the concern in the poll, as was shown in the poll, the concern of a stewardship of finance is very, very low, and their priorities, it is just above serving the state and government, but pretty low. 25%, as far as I remember, of opinions of where we should move in the future, being the service to the community. So there is a way to go, and it's wonderful that the VUB has given me in particular the honor. I'm very flattered that to have asked me to give this set of lectures over a number of years, and which I came to, the first set of lectures came to an end yesterday. But I would like to say a word also in the quality of my training as an anthropologist. If you're not an anthropologist, you may think that symbols are not much relevant. What are symbols, after all? They're just words, images, pictures. They do not refer to anything very tangible. But we have to think of the following, which is that we are a species. We're a species on the earth, and we are the only ones who have found courage, comfort, identification of aim. When we speak about going beyond simple material things, like dying for an idea, this is linked with symbols. So symbols for anthropologists are extremely important. They gather societies together. They give them goals, they give them something to believe in. Belgium, we know there are references to Belgium in the War of the Gauls of Caesar, where there's a Gallia Belgica. For a long period, the United Provinces were constituted of what was called the lower countries, with all the provinces of both Holland and Belgium together. And as we know, the separation between what we call the Netherlands nowadays and Belgium is the product of a lost independent war as far as Belgium is concerned. At the very bloody and sad fall of Antwerp, the war was sealed. The northern provinces became the Netherlands, and Belgium was left under the rule of Spain. Later on, there was an attempt to mend that in 1815. At the end of the Napoleonic War, the Netherlands were, the lower countries were gathered together. But too much time had passed, and after 15 years, a separation was demanded by Belgium. Belgium then turned to a famous family, the Saxe-Coburg-Gotha family, and asked that family to become the symbol of Belgium. And this is still going on. And it's been a long story and which has managed for these provinces with an auspicious, not auspicious start, the losing of a independent war, to become again a country, and a country which has a role to play, which has played important roles at different time in history already. A country which can be proud of what it is. So to conclude, when symbols, if you don't mind me calling you like that, give their support to the task we're trying to do here, to show finance how it can become the steward again of society, this is a very, very welcome support. Thank you for being here.
Good afternoon, everyone. My name is Laurien Kleijens, and I'm a master's student at the Solvay Brussels School of Economics and Management, part of the ULB. And currently, I'm doing research on the impact of the double bottom line of microfinance institutions on codes of conduct and ethics, and the supervisor of my thesis is Marek Hudon. So today, all sorts of organizations have a code of conduct and ethics in place. And while the codes of traditional companies have been extensively studied in scientific literature, to date, little research has been conducted yet with respect to the specificities of codes of ethics of microfinance institutions. So as opposed to traditional companies, microfinance institutions have a double bottom line, aiming to balance both a positive social impact and financial profit. However, in 2007, an ethical debate was provoked in this industry by the creation and the distribution of exceptional profits associated to the secondary IPO of the Mexican institution Compartamos Banco, and 3 years later, the epicenter of the debate moved from Mexico to Andhra Pradesh, India. So this ethical crisis has led microfinance leaders to embark on a process of action, and in order to restore trust in microfinance as a poverty reduction tool and to tackle ethical lapses in the industry, providers of microfinance have developed and implemented codes of conduct and ethics. The scope of my master thesis is limited to Mexican microfinance institutions, and there are two main reasons for choosing Mexico. So first of all, as mentioned before, the ethical debate in the industry was prompted by the Compartamos IPO in 2007. And from this point of view, and looking at Compartamos Banco as one of the most controversial institutions worldwide, it seemed very interesting to have a closer look at their code of conduct. And then the second reason is a personal reason. So last summer, I've spent working as an intern for an NGO in Mexico, which makes me fairly familiar with the Mexican market as well. And then with respect to the used methodology, so in the beginning of the year, all the Mexican microfinance institutions were contacted by email twice with the inquiry of whether they had a code in place, and if it was the case, they were invited to send the code to me. So the aim of this approach was to collect as many codes as possible, so that afterwards 4 wide-ranging codes of conduct could be selected for fine-grained content analysis. And out of this collection, the codes of Compartamos Banco, Progresemos, and CAME were selected. And these 3 MFIs cover more than 25% of the Mexican microfinance markets in terms of gross loan portfolio, which makes it very significant. And in addition, the code of ProDesarrollo, the largest MFI network in Mexico, was selected as well. And then finally, I conducted a lot of interviews with the management of the selected codes as well as with industry experts. Finally, in the case study, the content of the 4 codes was compared with respect to stakeholder responsibilities, employee responsibilities, corporate values, as well as implementation and compliance. And in second instance, I tested to what extent, so the mission, the target group, as well as the methodology used by MFIs had an impact on the code. And preliminary findings suggest that indeed, the mission and the target group are determining factors in the aspirational part of the codes. However, the code focuses on a lesser extent on the used methodology. So thank you for your attention. If you have any further questions, I would be happy to answer them afterwards.
Thank you very much, Ms. Kleinjans. I remind you that 2 students will come at a time. They will both speak. Everyone can choose in whatever language they want to speak, and then there will be every time there will be in every quarter of an hour there will be 2 students speaking, and then 5 minutes for questions that may be asked. Now, Ms. Zadbo, please.
Good afternoon. I am Gracia Sagbo. I am a second-year master's student at Solvay ULB. I am currently writing my master thesis under the direction of Mr. Maracudon, and the research question I seek to answer is the following. Should the mission and type be taken into account in the ethics of microfinance institutions? Why such a question? Well, today, microfinance, which is the provision of services to poor people and which was considered as intrinsically ethical, is facing an ethical crisis. Recent events, such as the suicide of microfinance clients in India, have raised strong ethical criticism that are threatening not only the reputation of the sector, but the whole sustainability of the sector. And what we can see is that this crisis arises in a context where, as microfinance is growing, it is also gaining in complexity. First of all, we have witnessed an increase in the diversity of the types of institutions providing microfinance services. It started with the member-based cooperative, it evolved to the non-profit organization, and even to the more for-profit commercial banks. Do these different types of institutions have the same responsibility? Should the expectation we place on these different types of institutions will be the same? This is the kind of questions that will be raised in the first part of my work. And secondly, not only the types of institutions have evolved, but also their mission. The microfinance traditional dual mission of poverty reduction and financial sustainability have been customized and adapted by the different institutions. Today, there is a difference in the way each institution defines its social objective, the way it defines its financial objective, and there is also a difference in the emphasis they put on the financial or the social aspects. Some institutions are really poverty-oriented. In their missions, they talk about reducing poverty, they talk about empowering women, while for other institutions, they don't talk about poverty reduction in their mission. They rather talk about financial inclusion. And the second part of this work is concerned about this mission, is a reflection about this mission. Should we accept all the different missions that come from the institution, or should we maybe stick to the original dual mission of providing financial services to the poor, of reducing poverty in a sustainable way? Thank you for your attention.
Thank you. So do your Royal Highnesses wish to ask these two students any questions?
If I can ask a question, because with microfinance and Belgian mostly, it's really a very interesting. It's very important to invest in microfinance. My voice is not good enough.
I'm not really good at technology. It's off.
That is very and it's still off.
And it will remain off.
Yes. Do we wish to pursue? Yes.
If it's possible. So I just say, with my Kudo, I had the possibility to follow some course. Is it working?
Yes.
With Marie Coudon, I had the possibility to follow some courses around financial inclusion and microfinance and the importance of microfinance. And I would love to ask a question, because you spoke about the diversity of the missions of the institutions of microfinance. What about the codes of conduct? What do you think about an international code of conduct? Because there is also a danger to have different kind of codes of conduct. I don't know who wants to...
I would like to answer that question. So I've been recently looking into the content of the different codes, and even in Mexico, you see that there's a large uniformity. And there's an initiative, the SMART campaign, that has recently also has been published on its website, also a guide to make your own code of conduct. But that's also a remark that I should make, is that diversity amongst code of conducts is not necessarily a bad thing, because it also reflects like the authenticity of its organization. So I think always each organization should take into account its personal context. So for example, in the region of Latin America, you see that Mexico is very developed with respect to microfinance, but for example, Costa Rica, on the other hand, is still underdeveloped. So if these institutions would copy the codes of conduct of Mexican institutions, I don't think that would be like the best idea. There are definitely elements that they could take over, but yeah, each institution has to look at their personal context.
What are the main obstacles to develop these codes of conduct in Mexico or somewhere else?
The main obstacles is, I think, that the organization has to free up some resources as well as time and staff to draw up these codes. So it takes a lot of time to develop these codes, because it's not just one person who's drafting up a code, but usually it's done also in collaboration with employees, with clients as well. So this is a long process to develop. So that's the main obstacle.
And do you think that the public authorities, do they have a role to play? To
yes.
develop a code of conduct?
I think they should encourage all institutions in Mexico to develop a code, but I would say that they should be very cautious about drawing up the rules of a code, because sometimes too many rules can also be too stringent and can have an adverse effect on the effectiveness of a code.
Would you like to add something?
No, I think on code of conduct, she answered pretty much.
All right. Well, thank you very much in that case. I'm going to ask the two further students to join me, Ms. De Voort and Mr. Van der Moerteel.
Goedenamiddag, ik ga mijn presentatie in het Nederlands geven vandaag. Het onderwerp van mijn thesis is waar bevond de bijtbank zich voor de afsplitsing. En ik schrijf deze thesis onder begeleiding van professor Weets. Voor eerst wil ik jullie vertellen dat het belangrijk is als investeerder of als kredietverlener of als leverancier om een idee te hebben over de financiële situatie van een onderneming. Die situatie is immers doorslaggevend wanneer er beslissingen worden genomen in zaken het verschaffen van kredieten, het al dan niet aankopen van aandelen of bijvoorbeeld of het veilig is voor een leverancier om goederen op krediet aan een bepaalde organisatie te gaan leveren. Het is dan ook omwille van die reden dat er op nationaal en internationaal vlak een regelgevend kader bestaat om ervoor te zorgen dat organisaties op een eerlijke manier hun financiële situatie gaan rapporteren. En door een regelgevend kader uit te schrijven voor die rapportering laat het eigenlijk ook toe dat de financiële rapportering tussen instellingen onderling kan worden vergeleken. En het belangrijkste document van deze financiële rapportering betreft de jaarrekening. En die jaarrekening is een weergave van de gezondheid van een onderneming, in zover dat die kan worden uitgedrukt in monetaire termen. Het gaat bijvoorbeeld over het vermogen, de vermogensevolutie. Wat was het resultaat van een onderneming op een bepaald ogenblik of voor een bepaalde periode? En die jaarrekening die wordt jaarlijks eigenlijk neergelegd bij de balanscentrale van de Nationale Bank van België, zodat al die documenten eigenlijk worden verzameld op één plaats, zodat die te alle tijden en op elk ogenblik door iedereen kunnen worden geconsulteerd. Voor beursgenoteerde ondernemingen en kredietinstellingen daarentegen is er wel nog een strengere regelgeving. Zo moeten bijvoorbeeld kredietinstellingen naast een jaarverslag ook met kwartaalresultaten voor de dag komen. En dat brengt ons dan uiteindelijk bij het onderwerp van mijn thesis. Ik denk dat iedereen vandaag wel al gehoord heeft van de problemen die zich afspelen bij Dexia. Die groep is volop in ontmanteling. En hetgeen dat vandaag eigenlijk achterblijft onder de noemer Dexia is eigenlijk de restbank. Met name het ongezonde deel van de bank, dat eigenlijk de hele groep, de continuïteit van de hele groep in gevaar bracht. En wat heeft men gedaan bij Dexia? Men is eigenlijk de gezonde delen gaan afsplitsen. En de ongezonde delen heeft men achtergehouden om deze eigenlijk op een zo goed mogelijke manier te kunnen gaan beheren en daar eigenlijk nog het beste uit te kunnen halen. Er is iets gelijkaardigs ook gebeurd bij ons bij Fortis, maar daar is het een beetje anders gegaan. Bij Fortis heeft men de ongezonde delen uit de bank gelicht en in een nieuwe instelling gestoken. En daar was het eigenlijk de perfecte presentatie dat eigenlijk zo'n bad bank, dus de bank met de ongezonde onderdelen, dat eigenlijk niet sowieso een verlieslatende instelling is. Want zo heeft bijvoorbeeld de bad bank van Fortis vorig jaar een resultaat kunnen neerzetten van meer dan 200 miljoen euro. En het ding is nu dat ik ga kijken of ik in die jaarrekening voor de ontmanteling van Dexia eigenlijk al het ongezonde stuk kan terugvinden in die jaarrekening. Want die jaarrekening moet transparant zijn en moet ervoor zorgen dat de belegger eigenlijk een goed inzicht krijgt in hoe de situatie van de onderneming in elkaar zit. Als ik dat uiteindelijk niet zou kunnen terugvinden, tot op heden heb ik het nog niet meteen teruggevonden, dan kunnen we ons natuurlijk vragen stellen over de transparantie van die jaarrekening. Want moet er dan eigenlijk een bijkomende regulering komen die zegt dat eigenlijk het ongezonde deel meer in de verf moet worden gezet? Of moeten we ergens een lijn trekken van we kunnen natuurlijk altijd regels blijven bijcreëren, maar op een gegeven moment stopt dat. Want als er ondernemingen zijn die steeds de achterpoortjes gaan zoeken van die regelgeving, dan wordt het eigenlijk nodeloos van altijd nieuwe regels uit te schrijven. Dus moeten we misschien eens stilstaan dat er misschien iets moet veranderen in de instelling van bepaalde ondernemingen om effectief een waarheidsgetrouw beeld weer te geven in plaats van zo'n gezond mogelijk beeld om gemakkelijker aan financiering te geraken. Dat was dus een korte uiteenzetting van mijn thesis. Bedankt voor jullie aandacht.
Wel bedankt.
Good afternoon, everybody. I am Maxim van der Moortel, master student in law, majoring in corporate and finance law. Within the framework of this chair, Stewardship of Finance, we were asked to give a reflection and to reflect on a topic within financial law. And today I will present you the conclusions of my essay, Some Thoughts on a Regulatory Framework for the financial industry post-crisis. Policy considerations influenced the transfer and interpretation of the classic liberal ideology throughout history. Whereas Adam Smith believed that regulation was absolutely necessary to prevent potential malpractices in the financial industry, Milton Friedman and Alan Greenspan wholly relied on the efficient market hypothesis and kept down every form of government interference. This resulted in the extensive deregulation of complex and innovative financial activities, which is considered one of the main causes of the 2007 financial crisis. To save our future generations from such financial calamities, we advocate a regulatory framework that supports the sustainable development of our financial industry and enables financial institutions to regain the trust of our society. An efficient regulatory framework should first of all be based on an economic model that recognizes the rational, irrational behavior of market participants. Such a model explains that, however, a certain decision might seem irrational in perfect market conditions, the same decision is in fact completely rational within the context of our imperfect market system exposed to economic bubbles. Using this starting point, regulators are able to involve the possible emergence of market failures in their policy and to anticipate on it. Secondly, it's key to create a climate where efficiency finds itself in a balanced relationship with some social core values, such as individual responsibility and mutual trust. Indeed, from an industry with such an important social impact, we do not only expect optimal efficiency, but also attention to the collective needs of our society. A sound regulatory framework therefore has to make sure that those financial institutions include these essential social values in their decision-making process. Inter alia, this implies a reduction of the amount of financial intermediaries in the equity investment chain and the implementation of incentives that do not stimulate quantity, but qualitative transactions and relations in the long run. A sustainable financial industry thus needs a sound regulatory framework to guide the financial institutions in the right direction. However, government must refrain itself from too restrictive regulatory interventions. After all, unilaterally imposed laws and regulations merely lead to box ticking and do not incite the absolutely necessary intrinsic motivation to comply with core values. The latter can only be achieved through involvement of the industry itself, using a model of tightly regulated self-regulation. Therefore, we propose a flexible legal framework in which industry codes complement governmental principle-based rules. This method will eventually facilitate a constructive cooperation with the different stakeholders and will unite them around a common engagement: banking for society. Thanks.
Thank you, Mr. Van der Moortel. Your Royal Highnesses, any comment or question about these two presentations?
Very interesting exposé, both of you. Congratulations. It's a very complex material. I would like to understand what could be a self-regulated measure proposed by the industry itself. Mm-hmm. Can you give me an example?
Well, indeed. It's a very good question. As I said, when a regulator will impose unilaterally laws and regulations on a financial institution, it will look for a loophole, just as Gail says, or it will merely lead to box ticking. A good example of that is the recent Tobin tax, for example. When in France, when France implemented the Tobin tax, what was discovered just the day after, regulators saw that financial institutions deviated the taxed financial activities to other countries where such a tax was not imposed. You see, so what you need to do is you need to involve the financial institutions in the regulatory process. The regulator, first of all, needs to make sure that there is you could say, a fertile soil of shared common values, and provide a strong legal framework. And within that strong legal framework, you can then you can then work together and communicate with the financial institutions to provide a flexible framework that works for all parties, you see, and where all stakeholders, not only the government or financial institutions, but also deposit holders, for example, have their votes, for example, you see. And then you get a flexible framework that fits all. And for example, what's also necessary in such a framework is that the regulator and the government has to make sure that that the financial institutions comply with certain values, and that's only possible when the government makes sure that they put the right incentives in place. You could, for example, couple discussion about remuneration on the compliance with, for example, or you could couple the discussion. You could couple the discussion of remuneration on a topic about, indeed, does this financial institution incite long-term relationships with its clients, for example.
I will add just a little remark to what you said. You mentioned box ticking, and maybe it's not the notion is maybe not familiar to everyone. When we say box ticking, we mean the following: when there's a particular law or regulation, there's the spirit in which the legislator has produce the law or the regulation in order to attain a particular goal, a particular objective. And then there's the letter, the way it is being phrased. And box ticking means the following, which is that you will put together a number of people and they will say, okay, how can we follow really the letter of the law and maybe not entirely the spirit? And you make a list of the different elements which are written in the law, and you say, you tick the boxes, you say this is okay, this is okay, this is okay. It may be that at the end of the process, the spirit of the law is not being really observed in that process. That I think was important to give that additional little explanation.
If I understand well, a very interesting expose. You would like to do legally. You would like to give a legal solution to an ethical problem, right? Because tightly self-regulation is equal to ethical, responsible.
Yeah. Well,
so why do you have to go through a legal solution if you can do it ethically? I don't know if I'm clear.
Yeah, sure. When a financial institution or when the right incentives are not put in place for such a financial institution to comply or to behave ethically, it probably won't do that. So it's important for the regulator that he puts in place the right incentives and that he provides a legal framework, and that they ensure that within that framework, financial institutions have sufficient flexibility, but that they will comply with the core values that constitute the framework. So that's important because in a deregulated environment, you don't have kind of a framework built up out of social core values such as individual responsibility, and then financial institutions do whatever they want. You see, if you don't have a regulatory framework, you get risk-sharing structures, which mean that at the end of the road, no one will be responsible. You see, and I can give an example from the United States. In a deregulated environment, what happened? A normal bank gave a mortgage loan to a household that couldn't repay that loan, and afterwards the bank, that's in fact irresponsible behavior on the account of the bank. The bank at the end just sold the loan to another investment bank. So the bank, it didn't matter for the bank that the household wasn't able to repay its loan, you see. And that's a lack of individual responsibility. So it's important that you have a framework in which banks will behave responsibly.
Kan ik u eventueel een vraag stellen in het Nederlands?
No, it's okay in English if you want to.
Okay. Do you think that we have taken enough measures to avoid all these bad banks in the future?
I think that the problem was with this crisis was in fact that a lot of risks were, as he said, a lot of risks were taken together and then split by across all institutions. And everybody thought, well, now we don't have a heavy risk to bear because it is spread everywhere. And the problem was with the crisis is that suddenly when institutions came into problems, nobody knew who was the one that was going to catch the hardest smack of the system. So there was a little bit lack of transparency again, because everybody thought it was okay because everyone was making profit and it was also allowed to make these products. And it went this far that at a certain moment nobody knew where the risks were, so there was a lack of transparency. So maybe it is an idea to take further regulations, to say to banks that they must limit the extent to which they structure their products and that they are losing their transparency. So there was a lack of regulation, perhaps, that they allowed the banks way too much to do risky business and to create structured products, which made the financial sector really not transparent anymore. So I think that's a lesson for the future, that we must work again with products that are understood by everyone, and that the investors know what they are buying, what the risks are, and that there's a better information flow from the banks towards their clients, but also in the financial world itself.
Just one final little remark about what you say about being transparent and explaining exactly what you do. Typically, what is called the prospectus for a security made out of subprime loans, that document is typically 600 pages long. So sometimes providing just the information is requires that specialists read the material, because when the structure is so complex that you need 600 pages to explain exactly how it works, it is not open to the public to know exactly what you're looking at. And you know from using the internet, when there's a new version of something, they say you have to check that you've read the whole material, and if you look, it's like 35 pages and nobody does it. Of course, it is entirely transparent, but it's beyond what we can do in terms of reading it at all. Thank you very much. Mr. Schuren and Mr. Dudecum, please.
Good afternoon, everyone. My name is Ines Verschuren. I'm a master's student, Commercial Engineering and Finance at Solvay Brussels Schools. And I'm delighted to be here today to present to you my master thesis, which is entitled The Dependence of Firms' Performance on Their Creditworthiness Appraisal. I'm currently researching and writing about this topic under supervision of Mr. Hugues Pirot, who is a professor, risk management and corporate finance at our school. So, credit rating agencies have been created to solve the information asymmetry between lenders and borrowers in the market. They do this by providing independent opinions on borrowers' creditworthiness through ratings. These ratings, they serve as an important metric on which many debt holders and investors rely for making investment decisions. This is a good thing. However, in my thesis, I'm studying unwanted side effects that these credit ratings or creditworthiness appraisal may have on firms. So why is this an important topic? Well, regulations, credit rating agencies, and all of us, we have to be aware that appraisal of credit risk may have impact on corporate behavior, and that this impact may influence the company negatively. Previous studies have shown that changes in ratings affect firms' capital cost and therefore, consequently, its capital structure and its investment decisions. Moreover, certain credit rating levels may impose the firm additional cost due to supplier contracts, labor concerns, or the signal effect that the rating may have in the market. And finally, at certain credit rating levels and during economic difficult times, some firms may not be able to go to the capital market to raise debt. Therefore, they incur additional cost as they forego NPV-positive projects which they can't finance. So imagine a company on the boundary of investment grade level. If it faces a credit downgrade, its cost of financing will go up. Its stakeholders lose confidence in the company, it may review or cut investments, and this will have an impact on its assets, on its performance. So after a short period of time, the firm's performance may be much worse than anticipated by the market or by the credit rating agencies. As a consequence of that, the firm may face even more loss of confidence, more difficulties getting access to financial markets, and an even harder drawback on its performance. As a reaction, credit rating agencies may review the company and even give it a new downgrade. By this, we end up in a negative spiral and are sort of creating a self-fulfilling prophecy. So when I started my research, these are exactly the questions I asked myself. Is a question like, what if credit ratings or creditworthiness appraisal may truly affect the firm's performance and its sustainability? Are we creating self-fulfilling prophecies by relying and acting on credit ratings? And can a company end up in a debt spiral because of downgrades? Therefore, I chose this subject as my master thesis to examine these effects. And I will now shortly explain you more about what my study will be. So in most credit risk assessment methodologies, a high emphasis is put on solvency measures. And generally, structural insolvency is the inability of a company to honor its debt because of an insufficient amount of assets. As the evolution of assets is conditioned by the performance of the firm, we would expect the performance to impact the assets, the solvency appraisal. In this case, the credit appraisal is an ex post assessment of a real corporate reality. However, in an imperfect world, this appraisal may fire back on the company because this appraisal may influence possibility of continue funding fluently and at the same cost its activities, where, and therefore it might fire back, leading to a self-fulfilling prophecy and a death spiral, as I shortly tried to explain you before. Thank you very much for your attention. I'm happy to answer your questions afterwards.
Good afternoon. I think Professor Flamé gave the perfect introduction to my PhD thesis. So I'm a PhD student at Solvay under the supervision of Ariane Safars, who's sitting there next to Hugues. The theme of my thesis is about bank opacity, or the lack of transparency of banks and what it may lead to. And especially, does it have any connection with the financial crisis that we observed and of which we still feel the consequences? I think Gaël also had a very connected topic, and it also gave a good introduction to this. Banks are about trust, and when Professor Flamé talked about banks, he mentioned the word confidence. Why trust? The trust is intrinsic to what they do. They take deposits from trusting individuals, and they grant loans to corporates and individuals, hoping or trusting that they will be repaid one day. At the same time, banks are intrinsically opaque. They lack transparency. Why is that? Because those lending activities to many individuals and corporates are difficult to represent to external investors. The accounting that you can give of what a bank does is very difficult to read and to process. And also, banks are getting more and more complex, larger and larger, and moving into market activities, trading activities, which are very difficult for investors to understand. This is one of the reasons that banks are regulated. What the regulator cares about is that banks should not do something silly with the money they get from depositors, from investors. What I contend, and I think there's strong evidence to show this, is that this lack of transparency combined with uncertainty becomes a self-fulfilling prophecy, a vicious circle. And when trust is lost, things are getting sour and sour. And this is what we saw during the crisis. So the first thing I need to show in my thesis is that banks are indeed opaque, and this is something that's not as obvious, as it may seem. It cannot be shown directly. So what I'm currently doing, the first step in my research, is to show that security analysts, the security analysts are those individuals employed by large banks and brokers that issue recommendations, sell, buy, hold on stocks, that those security analysts have less influence in the financial industry than in other industries. If that's the case, then it may be a sign that banks are more opaque. And this is indeed what I'm finding. I'm finding that, in general, security analysts have less influence in the financial industry, and especially since the crisis, they have almost, they've lost a lot of influence compared to the other industries. And when I try to understand why that is the case, what appears, this is still preliminary results, but what I see is signs of opacity. The analysts, the star analysts, the good analysts recognized by the market do not have influence after the crisis. Also, when you look at what banks do, cash, and a lot of cash within banks decreases materially the probability that analysts may have influence on banks. Where do you find a lot of cash? You find a lot of cash in investment banks. Why? Because cash is connected to the trading activities. So, this is the stage of my research that I've reached. There's still a lot of work to do, but, there's encouraging signs that I may be able to prove my purpose. Thank you.
Any questions from Your Royal Highnesses?
Again, I found very interesting your both expose, but I would like to understand more what makes a company not credit-worthy for a credit rating agency. Can you give an example?
So in general, for measuring the creditworthiness of a company, there are many factors taken into account. Credit rating agencies, they have a model which they built to model the firm's creditworthiness and come up with a rating. It's sort of a scoring. And often what they use therefore are solvency measures. So they compare the amount of assets towards the total amount of debt to see if the assets cover debt, total assets, or they can see if current assets cover debt. They look also at the rate, how much of the cash flows are going to debt repayments, how much is the debt, the maturity of the debt, and also how is the firm performing. So you have, there's a thing of causality also in what I'm researching, because credit ratings also look at what are the prospects of the company in terms of return, performance, and cash flows. And if this is deteriorating, like going bad, they are more likely to put in a downgrade or a negative outlook, because it's a healthy company is a company which generates enough cash in the short term and in the long term to continue funding its activities and to continue repaying its debt. So it's the most important factors.
I will add that there's also an element of stress testing to run scenarios of that things may be going bad, and to see how the company would, the figures of the company, financial figures, would react to different negative elements in the events in the happening because of external sources.
And the bank is not able to do that, to do this analysis?
Yes, of course. Every financial institution, before sending out a loan, they have to analyze the company or the client itself internally to see whether this client is creditworthy or not. So often financial institutions themselves have also sort of a credit rating agency or a credit rating model for companies and clients. But what we're seeing now is also after the crisis is that the regulation is putting a high emphasis on the credit ratings given by official credit rating agencies for their loan portfolio or what they take or to which company they lend out. And the environment also is becoming more and more risk averse. So it's the combination of this risk averse and the high pressure to rely on these credit ratings, that there's a sort of increased systematic risk almost, that the persons inside of the bank itself will put their own judgments not as hard as credit rating agencies. Just that they like to be more cautious and more depend on external also.
And is going to the stock market not a good alternative to this when it doesn't go well with, let's say, the bank? Can it not go to the stock market?
So if a firm, stock market is a different way of financing. It's financing with equity, whereas asking for a loan or going to a bank is financing by debt. And the problem is a company which is not very creditworthy and which can't find loans by banks or on debt capital markets is a risky company, and is a company which has some serious troubles and needs to prove itself. So if it goes to the stock exchange, it's even more expensive for the company to pay its shareholders or or to reward them somehow, because it's a high risk for a shareholder to give equity to such a low credit-worthy company.
Can I ask you maybe one question? How should the role of the equity analyst be adapted in the future?
You know, I think in finance, security analysts are shown to have importance because they kind of fluidify the market. They help process the information, and it's a bit controversial that they should have an impact, by the way, because they don't create new information; they simply rehash it and represent it in a different way. You know, security analysts are often accused of being biased. And biased through the role that their employers might have and what their employers might do for the companies about which they provide recommendations. This is again a bit controversial, and you know the literature shows that there's no obvious sign of bias. If you wanted to change the structure of the industry, what you may require is for those activities of analysis to become totally independent of the brokerage activities. And actually a number of firms already do that, which may put pressure on the other existing analysis firms connected to brokerages to be more independent. That may be why recently no sign has been found of bias.
Thank you very much. Now our final set of two students will join us. Ms. Borgerhoff and Mr. Motrad, please.
Good afternoon. My name is Julie Borgerhoff. I'm a master's student at the Vrije Universiteit Brussel in law. And within the framework of this chair, Stewardship of Finance, and under the leading of Professor Bijtewier, I did a research to the shift of economic power from the Eastern world, from the Western world to the Eastern world. And there are different indicators nowadays that can show this shift. Firstly, there's the GDP. The GDP per capita in Eastern countries is higher and higher, and is even rising above the one of Western countries. So they become economically wealthier and therefore economically more powerful. Secondly, there are also a few factual occurrences from which we can notice a visible shift from west to east. And this is in some economic sectors, and I have two of them in my research. One of them is the automotive sector. The price of cars is a very important factor, and so is also the cost for the producers. So to keep these prices down, it is better for the producers to produce the cars in low-wage countries, such as the Eastern countries. And then secondly, there's also the fashion industry. These important pieces of this industry are fast developing in the Middle East. There are much fashion houses who shift from Italy and from France to the Middle East countries like Qatar. The above findings, I linked them to an invited talk we had as part of this chair by Mr. Emmanuel Todt. And his invited talk was called Les élites européennes, incompétence historique et anthropologique, in which he made a critical explanation for the reasons for the incapacity of the European elite, so the European policymakers, to develop an adequate answer to such developments. So after this talk, I asked myself the question, if those Eastern countries have economic policymakers that are more competent, more capable than the policymakers in Eastern countries, because when we see this shift from West to East, we could assume that they have a more efficient political decision-making process than used by Western countries. But when we look at these Eastern countries, we see that the structure is very vertical. They make decisions, state decisions, who are imposed from top hand in a unilateral way. So their economic policy may be more efficient than the one in Western countries, but the ethical value of this sort of policy-making choices may be questionable. So in this sense, the fast developing Eastern countries is the fact that they are developing so fast is criticized. But on the other hand, there can be some indications to learn from the way that these countries act. For example, Mr. Todd, he promotes the reintroduction of certain trade barriers as a possible solution for the long-standing financial crisis. So to end, there's a shift from west to east, but when we make the comparison between those two countries, the question is if this shift is ethical and stays ethical. So I think this question to end is maybe a subject for further research within the chair of Stewardship of Finance. Thank you for your attention.
Thank you, Ms. Bocherhoff.
Good afternoon. My name is Ronnie Moortgat. I'm a PhD student at the VUB. I'm working under the supervision of Professor Dr. Bart van Kerkhoven, and I'm doing research about the happiness research that is existing, the subjective well-being research. For today, I prepared a small argumentation titled "Financial Ethics Will Improve the Profitability of Your Business." We all want to live a happy and a fulfilling life. And besides that, we all want the people that we love to be happy too. So happiness matters to all of us. Is there an ethical rationale for publicly financed happiness? Rosemary Peevler claims that small businesses who engaged in ethical financial practices will be more profitable in the long run than a small business does not. Lack of ethics in finance is one of the primary factors that led to the fall of Wall Street and the near collapse of the US economy in September and October of 2008. It precipitated the worst recession since the Great Depression. Many large banking and insurance firms failed. As well, small business failed, also including small banks who had made risky loans. Business has found out that good ethics does not happen automatically. So they argued for the misgrowing that not regulating, for example, banking was necessary in order to increase economic growth. But in fact, economic growth became a more important objective than the short or long-term economic stability. Greed and fraud may make short-term profits for both large and small businesses, but the short-term profit isn't very important when you don't have the people who can consume a large amount of the products you sell. So long-term viability is the issue and the goal to achieve. That raises the question of how does a business, whether a large or a small one, stay viable and strong in the long term? The answer is through satisfying its stakeholders. But who are these stakeholders? Besides the group that have some reason to invest in the future of your company, we also should think about the happiness of the consumers. What really matters to people should be our main focus. An economy becomes stronger when consumers are happy and have more money to spend. We lived and still live in a society based on an economic system that emphasizes private ownership. In our capitalistic society, we live to make money. But Richard Leyer showed us that gaining more money not imperatively means more happy. So the ongoing worldwide financial and economic crisis has also brought a theoretical crisis within economics as a field of study. It is time to question the very aspects of its foundations. So voices are raised to develop the economic views from a money-making point to a satisfaction one. In the Western history, the search toward happiness turns out to be prominent, and most likely William James had it right when he claimed that manhood always and everywhere are looking to become happy. As a matter of fact, among the general public, there is no agreement about what we understand under happiness. So the difference between cultures about how to reach that ultimate goal are large. Woman, man, child, Swede, Brazilian, everybody has something to say about what makes him happy. Happiness conquered a place on the policy agenda, in addition to Bhutan, where the gross national happiness controls policy for a number of years. Great Britain and Australia are pioneers in the use of happiness as a standard of value. But what is happiness? To define happiness, we have to answer three questions. Why, where, and how do we experience happiness? Questions should, however, be raised with regard to the subjective nature of this research. That is, we all have an idea about the aspects of happiness, but should not underestimate how little we actually know about this issue. So, to conclude, on the one hand, ethical finance business would make a difference in the long run. It would make people happier, it would make the consumer group larger, and it would give that group more purchasing power. In extension, and perhaps the most important thing for investors, it would secure a strong economy. To exit this objection, by investing in ethical research, and more specifically in happiness research, companies would understand more about what, where, and how to offer their products. Companies and their investors would be able to better respond to the needs of a very diverse consumer group. So we create a win-win situation for both business and consumers.
Thank you, Mr. Moortraat. Your Royal Highnesses, any question for these two students? Excuse me.
Thank you very much for this very interesting discussion. My question on happiness. I'm also very interested about this fact of happiness because I think it's very central. Somewhere I read that we are not happy or we lose to be happy when we start to compare to others what they have more than you. So happiness probably you have to find in yourself and not in the comparison with others. On the other hand, the economy is very much based on competition, comparison of products and so on. So how do you see that we can create an economy that is more helping you to be satisfied with what you have? I know it's a little bit idealistic, but an economy that makes you more happy. Is that possible?
I think when you take ethical investing as a starting point, then I guess it's possible to create a strong economy on the one hand, and on the other hand, people who are happy. It is so that ethical investing is not only giving the company a good reputation, it's also, in addition to that, it's also making the investor and his direct environment more happy. It's when you invest ethically, you also give an indirect return to the society. You create or you create a product starting from the thought to make as less as possible damage to other people. So I think that as an investor or as a business, it's important to know that. I think we, at this point, for example, the banking sector or other business is about competition. And it should not be about competition, it should be about cooperation. And making money should be a result and it should not be a goal at itself.
How can you define for yourself the happiness?
Oh, if I knew that. Oh, it's, I think it's a very difficult question. There are a lot of books wrote about how to become happy. I think it's a very individual thing for us. And there are a few, and I don't know if you're familiar with the capability approach, but then you have to, you have a few things that have to be fulfilled to be happy. And I guess it's a bit like that when you have enough money to spend, when you have a good home, when you have a family, when you want that, when you are socially embedded, I think then you can become happy. And it's like Monsieur said, when you start comparing yourself with other people, it's a source of being unhappy. So I think you have to be a little bit egocentric and look at yourself and be happy with the things that you have, and don't be angry for the things that you don't have.
Isn't happiness finding principles that makes you better and the others better, and live up to them?
Oh,
it's very philosophical.
Yeah. Oh, I think when you have a society with people who are happy, that the ethical thing is a product of a result of the people who are happy. So I don't know that. I presume that when people are happy, they don't feel the need to do harm to other people. So the ethical part is flowing out of being a society that is happy. So I think we have to strive for a happy society, and when we have a happy society, all the ethical behavior will follow through.
I think we have some empirical evidence of being happy this afternoon, because every one of you students who made a presentation here and got the recognition of being here today and having their Royal Highnesses being present and asking these questions, and I think recognition is something really important, and recognition can happen to you whatever the amount of money you have in your bank account. I'm pretty sure it is just being recognized for the person you are, being appreciated for being a human being, part of the community. And I'm pretty sure that for every one of you students who made the presentation today, this having been able to do this in their Royal Highness's presence will be a lasting memory. And in the coming years, through your unfolding career, I'm pretty sure there'll be time you'll reminisce about this, and I'm pretty sure it will give you strength of remembering this. And if only for that, thank you to your Royal Highnesses to have come here and given this support by your presence.